We're going to be talking today about decentralized finance, cryptocurrencies, and the future of fintech innovation. Joining us is going to be Kevin O'Leary. He needs little introduction. The Canadian entrepreneur has found financial success in the software industry before turning to the small screen in the CBC television show Dragon's Den, which went on to get made into the American version that we all know as Shark Tank. More recently, Kevin's gotten involved in the DeFi industry and he's become a strategic investor in a company called WonderFi. So we're also joined by WonderFi's co-founder and CEO, Ben Samaru. Ben gained extensive experience in the legal and corporate finance industry before turning his entrepreneurial focus to the blockchain, to fintech, and to the digital asset industry. WonderFi just went public yesterday on Canada's NEO exchange. I'm wondering if you, Kevin, or Ben, if you could kind of jump in a little bit. Maybe, one question I kind of have is, what is it about decentralized finance that you think the average person finds, confusing or a little bit hard to understand, and how would you address those concerns?
Let me take a stab at it because I was one of those persons. And, the need to understand what this does and why you would use it and what problems it solves, it comes from, just what's going on in the financial markets right now. Let me give you an example. I recently reduced significantly the amount of exposure I had to commercial real estate. And so what happened there was sales of buildings into cash. Now I'm sitting on cash. This is about, less than a year ago. I talked to my cash management team. I said, okay, what can we get for these are large positions in cash? 20 basis points. That doesn't even beat inflation. That's not even close to inflation. And so the challenge for me right there was, all right, what are the alternatives? And this is where it gets interesting, because I argue that at the end of the day, it's the need that drives you to DeFi. So what we started to do, and this is really the lesson learned for everybody listening to this, we found out we could make somewhere between 3.5% and 5.5% loaning out DAI, USDC, other stable coins. That sounds easy enough. So we say, okay, how are we going to do that? We go to our compliance department and say, look, we're going to start converting USD into USDC. And they said, no, you're not. Where's the infrastructure? Because we're not talking, here's a challenge. Let's say you're running $1 billion mandate and you want to put 10% into crypto, any crypto. You're not going to download an app on your phone and stick $100 million into it. You have to have the infrastructure that actually does the day-to-day mark-to-market reporting, goes back into your accounting system. External auditors can check on a daily or monthly or quarterly basis and then generate the reports for the regulator in whatever jurisdiction you're in. It took me 4 months to set up just the regulatory environment internally and externally so that I could actually put in place a program, which we have now. We have a desk now that actually loans out our stablecoin and is garnering today 5.1%. There's no difference between that situation and the same phone call I got, and here's what got me into working with Ben. My daughter calls me up and says, hey, Dad, I got $14,000 in my bank account. I'm making zero. Can I do what you're doing with this, loan book you're building? And I said, no, I have 4 guys on my full time working on this thing now. It's been impossible for me to set it up. There is no way to easily do that because she's got to be compliant. She has to have a 1099 reporting. She's got to have reporting for the tax people. She can't just be rogue cowboy. At the end of the day, that's the biggest problem holding back everybody into crypto. Ben is solving that problem. That's exactly what we're doing with WonderFi. And that's why I'm so driven by this project. I think it's a tremendous opportunity to simplify this, give my daughter and 100 million other people the opportunity to start using the power of DeFi to actually work within the financial services system on a decentralized basis to make money. And that's just one use. That's just one application. That gives you an idea of sort of the journey I've been through to get to where we are today.
You're not the only one, because I can't tell you how many members that we get questions from. We always advocate that people have an emergency cash fund, that they have some cash reserves on hand to complement their stock portfolios. And they're frustrated. Even what they call high yield savings accounts, you're talking about 0.4, 0.5% tops. Lock it into a CD. Maybe you can get 1%. if you're going to go 5 years out. Meanwhile, you've got inflation, trailing 12-month inflation, 4%, 5%, 6% going through the roof. All that money is losing purchasing power. And, members are frustrated. And so, any kind of solution that can kind of solve, they can address that and put money to work in a safe and reliable way is going to be highly attractive. Like, whether you've got $100 million coming out of an entrepreneurial deal, or like you say, your daughter, $10,000 that you're just trying to keep it safe and make a couple of bucks on it. Any solution that you can come up with, it just has to be valuable.
It's really interesting because this, as we started to get into this debate, and I've been sort of moving my portfolio deeper and deeper into crypto. I disclosed, 8 months ago that I was 3% weighting basically in Ethereum and Bitcoin, but now I'm on my way to 7% by year end. And getting through the compliance and the platforms and the reporting and the external auditors and all this stuff, we are so early into crypto. I think the potential of this sector, when we build out the compliance infrastructure, is trillions of dollars. And, DeFi is part of that. We're going to make it easy for consumers to do it. It's probably one of the top questions I get on my social media is, what do you do with cash right now? What are you doing with cash? And this is what I'm doing with cash. And I'm not saying you put all your cash into it, but at least you have a way to use it. You download the app, you can, ACH some USD in, and then, or USDC or stablecoin, whatever you got, and then boom, off we go.
Oh, I was going to say, I think a lot of people watching are hearing you talk about getting 5-6% versus 0%. They're wondering the mechanics at play here. Could you talk about how people are able to achieve these kind of interest rates with DeFi, and what some of the risks and trade-offs might be?
The way you should look at it is, what is the risk of a stable coin? Now, there's Tether, there's DAI, there's USDC. The ones that I work with are DAI and USDC. And you have to have a way, if you have those holdings, to loan them out. You can decide to loan them out for 30 days, for 60 days, for 90 days, for a longer period, and the rates vary by the 24-hour cycle. Right now, you're sort of sitting almost at 5% for 30 days. You're writing a contract, and Ben is going to help you do that within the confines and the reporting infrastructure of what WonderFi is. Why don't you explain that, Ben?
Kevin talked about his personal allocations, and you talked about how it doesn't have to be putting in all your money. I think that's a really important point. Like, I don't think this is something where you put everything in. This is something where you can really benefit by just putting a little bit in to get exposure to the technology, to start understanding what it looks like and what it how it works. This I can't emphasize that enough, kind of for the viewers. That's the best way to learn and to get exposure to this, is to just play with a little bit. And so we're trying to make that really easy for people. Some of the higher yields, the higher returns that are being offered through DeFi definitely have higher risks. Like, I would, not to get into, we can get into the details, but basically, if it's a higher return, like, there's going to be more risks associated with it. So what we're really doing is steering people towards the most, audited, tested, protocols that have had the most transaction volume, where the risks are the lowest, and sort of the ways of generating the interest are the simplest, because we think those are the most appropriate for your entry level person who hasn't been in the crypto space, doesn't really kind of understand the ins and outs. So I really feel that a lot of the publicity around kind of risks and challenges with DeFi, they're true, but they come with the stuff that's really on the experimental side and like very advanced. And I would not recommend that people get involved with that side of things as a first step. It's overwhelming, and so I think there's really sort of a sweet spot. And this goes back to my point at the start, which is, this is just like the early days of crypto. There is so much good stuff out there, and there's so much crap. And so it's really about being able to, hone in and figure out what's a good fit for your average person. And I would just, I don't know how the chat function works here with your audience, but I would be super curious to just ask the question to the audience. For people that have played around in DeFi, what's the experience been like? Because with WonderFi, we're really we're testing with thousands and thousands of users and getting a lot of really good feedback and input. First, it's around why people want to use it. And so that goes to what Kevin and Dan are talking about, which is they're frustrated with their savings account at their bank. But the second is for people that are actually getting into it, what's their experience been like? So I would love to pose that question to the audience and see what the feedback's like.
Kevin, I want to shift it over to you for a minute. There's plenty of companies that are working hard to take advantage of the DeFi opportunity. I am kind of curious, what about WonderFi in particular caught your eye? Why'd you decide to become a strategic investor in this company rather than any of the other players that are looking to try to capitalize on this big opportunity?
You're right. There's many competitors, no question about it. And there's lots of different strategies and opportunities. I look at two baskets. I invest institutionally, but I also have a huge consumer following, and I wanted to find what happened to me here is, we were just talking about different exchanges. There's one other thing they're missing. It's sort of the part of the answer I'm going to give you about WonderFi. Let's say you figure it out and you're happy with whatever exchange you're using, and you figured out a way to loan out your stable coin and you're making 5%. Now it's April 1st next year, and you have to report your taxes. You haven't thought about that too much because a lot of these decentralized platforms and centralized platforms do not have the accounting or the tax reporting required to just press a button and produce a 1099 or produce the reporting that you're going to need to finish off your return. No one thinks about that in crypto until they're about a week away from filing their taxes. Did they make money or lose money? Capital gains, capital losses. Were they short-term, were they long-term? Was it interest on your assets? What is it? I wanted to make sure on the consumer version of what we were going to do that we solved for that too, because when you start your journey and you start setting up your account, you start learning, you have this intrinsic assumption that, oh, I guess I'll find a button in here somewhere that'll produce my tax forms. Well, that doesn't exist in crypto land, and we have to build it. And that was the number one thing I found attractive about, WonderFi, because I had already solved my problems with two giant institutional platforms, Circle for my USDC, where I'm now about to become a shareholder of the business through their SPAC PIPE. And I actually use their platform to deploy capital. And also FTX. Some of you know I've become a paid spokesperson, but also I'm an investor beside Sam Bankman-Fried and his platform, because what he's built, and it took me 4 months to work it out. I talked about moving my allocation to 7%. Well, how am I going to do that? I need investment grade compliance, and that's what FTX has. So I've got that worked out on the institutional side. I wanted to work it out for the consumer side, going back to solving it for my daughter, saying, just download this app and it'll do it for you. That's what we're doing with WonderFi. So I think I have both sides of the equation solved now. I've invested institutionally, and now I've invested on the consumer side. And I think when you think about the WonderFi platform, there's three things you get. If you have no exposure to crypto, there's some on the balance sheet. So if you become a shareholder, you're getting exposed to a wide range of different cryptos. Number two, there's a lot of value in that app I'm talking about it, because I think when people try it and get the reporting they need, it's going to be very sticky. And number three, which I don't think Ben's talked about yet, there's going to be a consolidation in this space, a big consolidation. There's way too many players and we don't need them all. This platform will be something we can go and buy assets with. And the advantage we have, I'm almost calling it an unfair advantage, between myself and Josh Richards, we've got millions of followers. And the biggest challenge all of this fintech and crypto guys have is customer acquisition costs. We have a huge advantage. We can tell our base about this, have them try it, reach out to them by the millions, and see what sticks. And that's very important. So if I'm coming to buy your company and I can reduce your customer acquisition costs by 10, 20, or 30%, I think you're going to listen. And I think I can.
Kevin, let me ask you a question about the role that that DeFi and crypto is playing in your portfolio right now. You've often been, when I watch you talking on financial TV, you often seem to have a reasonably conservative approach. You'll use funds to kind of, keep a reasonable amount of money, to offset some of the more speculative investments that you make on the venture side. I'm wondering, how does DeFi fit in? Do you treat it, you've been talking about it being almost a cash alternative. Do you treat that as, filling the function of cash or fixed income investments in your portfolio allocation, or do you think about it completely differently? I'm sure our viewers would be interested in kind of the way that you think about from from an overall portfolio allocation standpoint.
Yeah, the biggest challenge I have in getting into crypto, and right from the beginning, was compliance. And I talked about it earlier. So in 2017, when I put my first allocation in primarily to Bitcoin and Ethereum, the regulator was not on board anywhere. It just was not compliant. And I wasn't able to do it through my operating company. I had to just do it personally, download a wallet and just buy some assets. Now, a lot has changed, particularly in the last 24 months. It started over in Europe, Switzerland, Germany, France, England, Japan, New Zealand, and Canada. Actually, the Canadian regulator has allowed now ETFs, which are extremely scrutinized, regulated vehicles, because I'm in that business too. And they are mark to market, as you know, by the second, and completely transparent. Well, you can find ETFs in Canada that hold as a core asset Ethereum and Bitcoin. And so when that regulatory environment changed, it allowed people like me to say, okay, I can now allocate to the asset and feel, that I can reach out to my auditors and regulators and ask them, how can I be compliant? Because it's not really, think about it this way. I've already got all kinds of investments in highly regulated financial services companies. There's no option for me to be rogue. I mean, I can't do that. I have to check the box on all my reporting, and this is the same as every other institution. So when we started to see vehicles like a Bitcoin ETF, I started saying to myself, okay, the problem for me with a Bitcoin ETF is, as you know, and this is just one challenge in that asset class, institutions are now beholden to ESG committees. So I don't just get to invest in any asset class if it's not conforming with the ESG rules. Now, that may sound crazy for crypto, but it's not. And so if I buy an ETF, I don't know where those coins that are, the asset are from. My Bitcoin holdings actually have a provenance where I knew where they were mined, and I own a piece of the company that does the mining, and I know they use ESG metrics. So that's problem number one. And that was the first part of compliance. But I look at these assets, and Bitcoin's a good example. Okay, now I own Bitcoin. They were compliantly mined. I've owned them since they were awarded. Okay, I know exactly how they were made, but I'm not making any yield off them. I have to loan them out and into a contract and start to get interest. So I think of the Bitcoin as property, and I think of my smart contract that's getting me interest as a financial instrument. And so my head is kind of around, I want to own property and I want to get rent from my property. Just like if I own a building in downtown Boston, which I do, I get rent. I get paid rent every month, and that's my income, and I get it in fiat. Now I do the same thing with my Bitcoin and my Ethereum and my USDC and my DAI. So I'm working to build assets as property and getting rent. That's how I think we should think about it. And so for me, when we were talking about, what's WonderFi, it doesn't have to be that complicated for you. Once you get, let's say, your USDC or whatever stablecoin you want, or whatever asset you want in there, you don't have to day trade it. You can call it your property, but you can use the WonderFi app to start bringing in income. And the good news, and I keep reminding everybody, you're going to get your reporting so that you can pay your taxes properly. That's Mr. Compliant in me, making sure that we don't hang anybody out to dry come tax time, including my daughter, who's going to be using this, and my son and all their friends, because I keep telling them, you're going to have to do your taxes. You're going to have to figure out how you did this, and we're going to give you that reporting. So I think I really like the idea of people that have not got into this to start thinking about, I'm going to buy some assets. I don't have to go crazy trading them. You can do that if you want, but I don't. I own them, and now I'm making 3.5 to 5.2% interest. And when I want fiat currency, I simply take my USDC and convert it back in, and if I need that cash, I have it. That's how it works.
You had mentioned earlier that you're at about 7% now in digital assets, which last time you were on the show, you had mentioned 70% equities, 30% fixed income. I'm just wondering, is this, as you see it, a more permanent shift towards digital assets? Do you see this growing over time, especially as you're moving out of areas like commercial real estate?
You know, you have a good memory. That I really do. I remember that conversation. That allocation is a goal towards December 31st of 7%, and it's all coming out of fixed income. The fixed income market, in my personal opinion, is treacherous right now. I think corporate credits are expensive. I think treasuries are wildly overvalued. And you know, when people say to me, okay, you know, we're managing your cash portfolio and giving you 21 basis points, and I know inflation is 2.1%. I mean, I'm really offside there. So I'm not suggesting that, you know, USDC is as safe as the US dollar, but it's more of, it's like the way I look at it, again, it's a personal opinion, it's like a money market fund. You try and have these things not break a buck, but you can't get anywhere near 5% in a money market fund right now. So I'm not saying you put all your cash into this strategy, but for me to have 7%, that makes sense. And in all of the work I'm doing these days, you know, when I form an agreement with FTX, for example, I don't want to be paid in fiat. I do not want to be paid in fiat. I want to be paid in crypto. And that is a huge change in, you know, the way I've been thinking for a long time. I have do not give me dollars. I don't want them. I don't need them. I have too much of, I don't mean I have too much of them. I have too much allocated to them, and I don't need more. I'm trying to get out of dollars and find assets. So I'll take crypto instead. And there's so many interesting, you know, different tokens, chains. I'm really excited about this asset class, but 7% is enough for now. That'll be my target to December 31st. But I would urge people to have an open mind to this stuff. You know, a lot of people think crypto is a bubble and all that stuff. Right now, I would start thinking about diversification, because when I hear that we're going to print $3.2 trillion for a new stimulus package, we've never done that before. I mean, that's never been done before. That's a lot of money supply. And I'm not saying that's a problem. I'm just saying we've never done it before. So nobody can tell me, oh, I know what's going to happen. They have no idea what's going to happen. So I get concerned about inflation. I've increased my exposure to gold as well. And I'm not saying we'll get inflation, but indications to me are that a lot of these points of inflation, this 2%, this 2.1%, are not transitory inflation points. I'm seeing real cost increases, and I would like to try some other assets, crypto being one of them. You know, but it's not the only one. I also, you know, if you think crypto is crazy, what about high-end watches? I have a massive allocation to very, very high-end watches, and that portfolio is up 114% over the last 18 months. So I'm pretty comfortable there too. I mean, people are trying to find hard assets now to put liquid cash into, because they're not feeling that comfortable anymore about what they're getting for holding cash.
I just signed up for notifications on the WonderFi website. It's saying get notified when the WonderFi app goes live. Can you give us a timeline on what you're expecting for that app dropping in the future?
Absolutely. We are looking at about a month from now that the app will be available. So we're super excited. It'll be iPhone, Android, and we've got thousands and thousands of users that are waiting for it. So we're really looking forward to putting that out there. I saw one other question, which is asking if Kevin's going to change his name to Mr. WonderFi, and we've actually got the paperwork on the way to Kevin. I don't know if you're aware of that yet, Kevin, but yeah, that'll be happening in the near future.
Well, Ben, thanks for setting that up. But I just want to be completely transparent. We renamed, DeFi Ventures to WonderFi. I'm just ripping off Richard Branson. That's all. And I'm proud. And I'm proud to do it. I know Richard. I love what he's done with Virgin. Well, here comes Wonder. So we're going to do this in my portfolio of companies, and I'm proud to do it. And here we go.
That's awesome, guys. Hey, Kevin O'Leary, Ben Samaru, thanks so much for spending an hour with us and educating our members on decentralized finance. It's been a real pleasure, and I hope that we'll have the opportunity to get you guys on again real soon.
Thank you. Take care.
Our pleasure. Thanks.
Thank you for watching this interview from The Motley Fool. This interview was part of a larger segment on our premium service, Motley Fool Backstage. If you'd like to see the entire exclusive interview, check out the link in the description. And be sure to like the video and subscribe to the channel for more foolish content. Thanks for watching.